Welcome back to the Malaysia Money Matters Show. It's the 14th of March, 2025. Let's jump right into today's top financial news from Malaysia and around the globe and unpack what it all means for you.
Sounds good to me.
Let's start with some Malaysian company news.
All right.
Okay, so first up we have specialty chemicals manufacturer SumiSaujana. They're going global, expanding into the Middle East and North America.
This is a fascinating development. They're not just chasing growth, they're also trying to outmaneuver these crazy high freight costs by potentially setting up manufacturing plants closer to their new markets.
Oh, wow.
Yeah, and considering over 70% of their revenue is already international, this could be huge for them.
It's a bold move for sure. What do you think this says about the direction of the Malaysian chemical industry overall?
Well, I think it signals a shift towards a more global mindset. Malaysian companies are looking beyond our borders for growth opportunities, and they're willing to make big moves to compete on an international stage. Of course, this kind of expansion comes with risks. New markets are unpredictable, and managing operations across different continents is a challenge.
It's definitely something to watch.
Yeah.
Speaking of challenges, Apollo Food Holdings saw their profits drop by 65.5% in the third quarter.
Yeah.
That's despite their revenue actually going up.
It seems counterintuitive, but their strategy is actually quite interesting.
Okay.
They're saying this dip is because of lower profit margins and because they haven't been selling off property like they were last year. But here's the key. They're using this time to expand their distribution network and pour resources into building their brand.
So they're playing the long game, betting on a stronger future.
Exactly. They're looking beyond short-term profits and focusing on building a more resilient, recognizable brand. It'll be interesting to see if this strategy pays off. It could signal a shift in the Malaysian food industry as a whole, where companies prioritize long-term brand building over quick profits.
Interesting. Now for a comeback story. Avangaad has shed its cash-strapped label and is making some big moves. They're acquiring a marine consultancy company, two tugboats.
It's a clear sign that they're not just recovering from their financial troubles, they're actively looking to dominate in the maritime sector, expanding their capabilities, increasing their market share. It suggests a real belief in their own potential, and possibly a resurgence in the Malaysian maritime industry overall.
That's great to hear. And speaking of big investments, Austrian circuit board maker AT&S is getting a massive loan from the World Bank to build a plant right here in Malaysia.
This is huge. A U.S. $250 million loan to produce advanced circuit boards for data centers and AI. What's particularly noteworthy is that it's one of the first sustainability-linked loans in Malaysia's electrical and electronics industry.
What does that tell us about Malaysia's attractiveness to foreign companies, especially in tech?
It confirms that Malaysia is a serious player in the global tech scene. We have the infrastructure, the skilled workforce, and now it seems a commitment to sustainable development that's attracting major international players. This could be a real boon for the economy, bringing in jobs and boosting our tech sector's reputation.
Now let's zoom in on something that could impact you directly. Motorcycle financier Parks and Credit just secured a RM 333 million sukuk to expand their operations, especially in rural areas.
This is potentially a big deal for financial inclusion.
Yeah.
Motorcycles are essential for many in rural areas, and easier access to financing could be life-changing, allowing people to work, get to school, or connect with their communities more easily.
That's a great point, but are there any risks with this kind of expansion?
Of course. There's always the risk of over-indebtedness, especially if lending practices aren't responsible. It's important for both Parks and Credit and regulators to ensure that people are making informed borrowing decisions and not taking on more debt than they can handle.
Makes sense. Moving on. Manforce Group is upgrading its stock market listing, jumping from the LAP market to the ACE market.
This is a classic sign of a company on the rise. They're clearly ambitious and believe they're ready for the big leagues. The ACE market gives them access to a much wider pool of investors and increases their visibility. It's definitely a move to watch for current and potential investors.
Now, for a company looking beyond our borders, TNK Chemical is investing in Singapore, buying land and a factory to expand their operations.
This is interesting because it shows how Malaysian companies are strategically positioning themselves within the region. Singapore, with its well-established infrastructure and status as a chemical hub, offers TNK Chemical a chance to tap into a different market and expand their regional presence.
It makes you wonder, though, what does it say about the competitive landscape here in Malaysia if companies are looking elsewhere for expansion?
That's a question worth considering. While this move could benefit TMK Chemical, it does raise questions about whether Malaysia is doing enough to attract and retain companies in this sector.
Finally, we have UWC, an engineering support services provider, riding high in the semiconductor boom. Their profits more than doubled last quarter.
This is a clear reflection of the continued strength of the global semiconductor industry. And UWC, being a key player in the Malaysian semiconductor ecosystem, is reaping the rewards. Their success is a positive sign for the Malaysian economy as a whole, potentially leading to more investments, jobs, and exports.
But isn't the semiconductor industry known for its ups and downs?
Absolutely. While the current demand is strong, it's important to remember that this is a cyclical industry. We can't assume this boom will last forever. Smart companies like UWC will be using this time to invest and innovate, ensuring they're prepared for any future downturn.
And on that note of future planning, Sinkung Logistics is adding a new dimension to their business. They're launching air cargo services.
This is a really interesting development.
Yeah.
They've just acquired Prima Air and are planning to launch air cargo operations in the third quarter, starting in peninsular Malaysia. They're targeting industries like aerospace, pharmaceuticals, and perishables, which require fast and reliable transportation. This move could significantly shake up the Malaysian logistics sector.
So how do you think this will play out?
Well, it's going to increase competition, which is generally good for consumers and businesses.
For sure.
It could lead to better services and more competitive pricing. But it will be a challenge for Sinkung Logistics to establish themselves in a market with existing strong players.
So a lot happening on the Malaysian business front. What do you think? Are there any clear winners or losers emerging from these stories?
It's too early to say for sure, but I think companies like SumiSaujana and Avangaad, who are making bold moves and investing in their future, are positioning themselves for success. On the other hand, companies that are slow to adapt to changing market conditions or are overly reliant on short-term gains might find themselves struggling.
Excellent points. Now let's shift gears and take a look at what's happening on the international stage. Some potentially big news there, too, with implications for all of us here in Malaysia.
Indeed, the global economy is showing signs of slowing down, and geopolitical tensions are rising.
Oh.
Let's delve into some specific events and analyze how they might impact us here at home.
Sounds good to me. Let's do it.
First up, Moody's is predicting a global economic slowdown with GDP growth projected to be just 2.4% in both 2025 and 2026.
That's a not very optimistic outlook. What are they saying is driving this slowdown?
Well, it's a combination of factors, really. They point to trade tensions, policy uncertainties, and geopolitical risks as the main culprits. It seems like everyone is on edge, and it's making investors hesitant. Emerging markets, unfortunately, are expected to be hit hardest by this slowdown as global trade becomes less reliable.
That's definitely something for us in Malaysia to keep an eye on. Speaking of keeping an eye on things, the new governor of the Bank of Japan, Kazuo Ueda, has been making some interesting statements. He's optimistic about consumption, but seems worried about their massive balance sheet.
Yes, it's a delicate situation over there. Ueda believes that as import costs fall and wages rise, consumer spending in Japan will improve. However, he also acknowledges that the Bank of Japan's balance sheet, which has ballooned due to years of quantitative easing, is now too big. He's hinted that they might need to start shrinking it.
So what does that mean in plain English? Why is a big balance sheet a problem?
Essentially, the Bank of Japan has been buying up assets like government bonds to inject money into the economy and stimulate growth. This has led to their balance sheet expanding significantly. The worry now is that this could create inflationary pressures and financial instability down the line. So Ueda is signaling a shift towards a more cautious approach to monetary policy.
How might this affect us in Malaysia?
Well, any major shift in Japanese monetary policy can send ripples through global financial markets. It could impact the Japanese yen, which in turn could affect the ringgit and investor sentiment. But our central bank has a good track record in managing external pressures, so I'm not overly concerned at this point.
That's reassuring. Now, while the global outlook might be somewhat gloomy, Asian stock markets are actually on the rise right now.
Yeah, it seems counterintuitive, but there are a few things driving this. Cooling U.S. inflation data has given investors some reason to be optimistic. And there's still a lot of capital looking for a home. However, those worries about a potential global trade war haven't gone away. They're lurking in the background, casting a shadow over this recent rally.
So how should Malaysian investors be navigating this uncertain landscape?
Well, I think the key is to be informed and to diversify. Don't put all your eggs in one basket. Keep a close watch on how these global events are unfolding, and be prepared to adjust your investment strategy accordingly.
Speaking of safe havens, Gold is having a moment right now. Analysts at Macquarie Group are predicting that prices could hit a record-breaking US $3,500 per ounce in the third quarter.
Yeah, it seems that gold's allure as a safe haven asset is stronger than ever. Geopolitical uncertainty coupled with worries about inflation and the U.S. deficit are driving investors towards gold. They see it as a store of value that can hold up even when everything else is shaky.
So is this a green light for Malaysians to start buying gold?
It's tempting, especially with these kinds of predictions flying around. But remember, gold is still a volatile asset. While it can act as a hedge against inflation and uncertainty, it can also lose value quickly. If you're considering investing in gold, do your research, consider your risk tolerance, and don't go all in. Diversification is still the best strategy.
Now, shifting focus to something that affects all of us, a new study has found that Malaysians lost a staggering RM 2.99 billion in 2023 because of hidden foreign exchange fees.
This is a really important issue. Many people are unaware of just how much these hidden fees can add up, especially when sending money overseas. It's a classic case of death by a thousand cuts.
The study by Wise highlighted that less than 20% of people actually understand these hidden FX costs. So what can we do to protect ourselves?
The first step is awareness. We need to understand that those seemingly small fees and markups can actually make a huge difference. Before making any international transfer, compare the exchange rate being offered with the mid-market rate. You can easily find it on Google. Don't be fooled by claims of zero fees or low fees. Often the markups are hidden in the exchange rate itself. Read the fine print, do your research, and consider using services that prioritize transparency and fair exchange rates.
Great advice. Let's zoom back in on the U.S. economy. Wholesale inflation there seems to be cooling down, but the Fed doesn't seem convinced.
Right. It's a bit of a mixed bag. The producer price index remained flat in February, which is a positive sign. However, core inflation, which excludes volatile food and energy prices, is still running hot. This makes the Fed's next move on interest rates even more crucial.
So what are the possibilities here?
Well, they could continue their aggressive interest rate hikes to combat inflation, or they could pause and assess the situation. The market is really on edge waiting to see what they'll do. Whatever they decide will have a significant impact on global interest rates, and that will, of course, affect us here in Malaysia.
And remember those trade tensions we talked about earlier? Well, they're starting to bite, especially for the auto industry.
Yes, the ongoing trade war between the U.S. and its trading partners is causing a lot of uncertainty and disruption. Volkswagen is scrambling to figure out how to deal with potential U.S. tariffs on Mexican imports, while BMW is bracing itself to absorb the extra costs.
How might this affect us in Malaysia? We do rely on imported vehicles.
Well, if the cost of imported vehicles goes up, it could impact consumer spending and potentially slow down our economic growth. We might also see a shift in consumer preferences towards more domestically produced vehicles, which could be an opportunity for local car manufacturers.
Now, turning our attention to the ongoing conflict in Ukraine, the situation remains tense. Russia is continuing its offensive, even as talks with the U.S. about a potential ceasefire are happening.
Yes, this protracted war is a tragedy on a human level, and it's having a ripple effect across the global economy. The impact on energy prices, supply chains, and investor sentiment is significant. Malaysia, being an open economy, is not immune to these global shocks.
So what should we be prepared for?
Well, continued volatility in energy prices is likely, which could impact inflation and consumer spending. We could also see disruptions to global supply chains leading to potential shortages or delays in certain goods. It's a reminder that we live in an interconnected world and that events far away can have a very real impact on our lives.
Now let's switch gears and come back home. Penang is aiming to be a leader in the electric vehicle space, with plans to have 600 charging bays operational by the end of the year.
This is a really ambitious goal, but it shows that Penang is serious about making electric vehicles a viable option for its residents. The state government is working with both city councils and encouraging private sector participation to build out the necessary charging infrastructure.
It seems like a step in the right direction. Do you think they'll be able to achieve their target?
It's certainly a challenge, but they seem committed. It's not just about installing charging bays, it's also about creating a supportive environment for EV adoption. This includes things like incentives for EV buyers, education campaigns to raise awareness, and policies to encourage the development of a robust EV ecosystem.
Speaking of ambition, InvestKL is setting its sights high, aiming to attract RM 17 billion in investments for Kuala Lumpur over the next 5 years.
That's a bold target, but it reflects Kuala Lumpur's desire to remain a leading business hub in the region. They're not just looking for investments from traditional sources either. They're actively courting companies from emerging markets, recognizing the shifting global landscape.
So what kind of impact could this have on KL?
If they're successful, it could lead to a surge in new businesses, job creation, and economic activity. It could also enhance Kuala Lumpur's global standing, attracting even more talent and investment in the future.
Now let's talk about a sector that affects us all, healthcare. RHB Investment is saying that investor interest in Malaysia's healthcare sector is still strong, largely because of our aging population.
Yes, this demographic shift is creating a growing demand for healthcare services, making it an attractive sector for investors. The government's initiatives to improve access to healthcare, such as the introduction of national health insurance and take-a-full products, are also viewed favorably.
But what about the concerns over rising healthcare costs and the potential impact of the diagnosis-related group pricing mechanism?
These are valid concerns. Rising healthcare costs are a global issue, and finding the right balance between affordability and quality of care is a constant challenge. The DRG pricing mechanism, while aimed at controlling costs, is complex and needs careful implementation to ensure fairness for both patients and healthcare providers.
Excellent advice. Now let's turn our attention to the Malaysian stock market.
Ah.
Wawasan Dengkil, a construction company, recently launched its IPO on the ACE market, and it seems to have attracted a lot of interest.
It certainly has. Their IPO has been oversubscribed, with retail investors pouring in over $124 million. This is a strong indication of the confidence investors have in both the company and the Malaysian construction sector as a whole.
What do you think is driving this positive sentiment?
While several factors are at play. Ongoing government infrastructure projects, renewed interest in property development, and a generally optimistic outlook for the Malaysian economy are all contributing to this bullish view. For investors, this IPO represents an opportunity to tap into the potential growth of the construction sector. But as always, it's important to do your research and understand the company's fundamentals before making any investment decisions.
So we've covered a lot of ground today, from the global economic slowdown to exciting developments in the Malaysian market. Lots to think about, for sure.
It certainly has been a busy day in the world of finance and business, and it highlights just how interconnected our world is. What happens on the other side of the globe can have a very real impact on our lives here in Malaysia.
Yeah, it's been a bit of a roller coaster of a day in the markets, hasn't it? From global economic anxieties to these ambitious Malaysian companies making their mark, there's certainly a lot to unpack. And that brings us to the end of today's deep dive into the top financial news. What do you think, which story had the biggest wow factor for you today?
That's a tough one. But for me, I'd have to say it was SumiSaujana's global expansion. Their ambition and strategic vision to capture new markets and navigate those rising freight costs is truly impressive. It's a bold move that could have a ripple effect throughout the Malaysian chemical industry, encouraging other companies to think bigger and aim higher.
I think I'm with you on that one. It's really inspiring to see that level of ambition. And I think for me, though, I was most captivated by Avangaad's comeback story. To see a company emerge from financial difficulty and make such a significant acquisition is a testament to their resilience and their determination. It gives me hope for the future of the Malaysian maritime industry and shows that even when things get tough, there's always the potential for growth and renewal.
I think those are both excellent choices, and they really do showcase the dynamism and the potential of the Malaysian economy.
And on that optimistic note, we wrap up this episode of the Malaysia Money Matters show. Be sure to subscribe so you never miss an episode, and we'll see you next time for another deep dive into the world of finance and business. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.